With South Africa facing increasing demands from limited resources, the Finance Minister will put forward trade-offs and choices that must be made to put the economy on a growing and sustainable path. Government has not been able to rein in on expenditure and revenue collection is underperforming. Experts say with limited room to further increase taxes, the current conditions point to higher budget deficit. The consolidated budget deficit to GDP ratio is expected to widen to above 6% from 4.5% anticipated in the February budget.
The budget deficit was set at just over 4% when he set the budget in February of this year. If you take into account the fact that the economic growth rate has been disappointing, you take into account the extra money for Eskom and the tax revenue underrun, that means that the budget deficit is going to increase to over 6% of GDP, and obviously that is concerning. What the minister is going to be under pressure to show is, yes, the deficit is over 6%, but can he get the deficit down over the next 3 years? And that's going to require a bigger focus on fiscal discipline and more control on government expenditure.
Also keeping an eye on what is in the medium-term budget policy statement is Moody's rating agency, due to issue a review of South Africa this week. The agency is the only one that still has South Africa at investment grade rating of Baa3 with a stable outlook. Experts, however, say South Africa is walking a thin line in the wake of renewed load shedding by Eskom.
Well, they stood by us so far. Surprisingly so far. I think a lot depends on the medium-term budget policy statement and the determination with which this is presented. That could be the crux of the matter, the final tipping point. If it's seen that we're not hard enough, not harsh enough on Eskom, on telling them that so far and no further, and that's it regarding expenditure, then we will lose that grading. It's a very fine balance, and I think the risk of at least being downgraded is I think, becoming more likely. And what does that mean to us? That means our cost of borrowing, interest rates are going to have to go up. The cost of access to international funding is going to be more difficult. That would slow potential recovery even more.
The National Treasury will likely revise downwards its growth forecast for this year. In the February budget, the Treasury had expected the economy to grow at 1.5%. This has been reviewed downwards by several institutions, with the Reserve Bank putting its growth expectations at 0.6% for this year. Gloria Sofakomosi, SABC News, Johannesburg.